Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. We continue with our 2023 Outlook podcast series. After having discussed broader investment strategy and fixed income strategy in the last two episodes, in this one we turn to equities. Deteriorating growth inflation mix caused the equity markets to drop by circa 20% during 2022, the biggest decline since 2008. Developed market equities lost 19%, while emerging market equity losses touched 22%. Following a bear market year, the outlook can look rather challenging. However, looking back at the history, we notice that over the past 75 years, S&P 500 index has experienced 9 drawdowns in excess of 10%. In 7 of these 9 instances, the index rose by an average of 18% in the following year. The two exceptions followed the extreme events of the oil price shock of the 1973 and dot-com bubble of 2001. Even for other equity indices, 2 consecutive years of losses have been rather rare. So to that extent, history remains supportive of a positive return year for equities. But the question is, if this time is different. For this, we look at 2 drivers of equity returns, valuations and earnings. First, looking at valuations, most of the drawdown of 2022 came from the contraction in valuation multiples. Therefore, the question now is whether equity valuations have already discounted the information provided by the key macro trends. In our view, equity valuations are driven by rising recession probabilities and changes in bond yields. In our assessment, most of the recession considerations are in price already, at least in terms of valuations. Therefore, should our base case of a mid-cycle slowdown and not a recession materialize, valuations may even move higher. The second driver of valuations is bond yields. Historically, as bond yields increased, equity valuations rose too, reflecting the choice between equities and bonds. However, given the hawkish narrative from the central banks last year, equity valuations compressed while bond yields rose. Comparing the moves in both equity valuations and bond yields over the past 12 months, equity valuations seem to be reflecting the sharp rise in rates already. As such, any stabilization in rates should mean support for equity valuations. Now, moving to earnings, in 2022 we saw upside to earnings estimates which did materialize. However, the earnings picture might be a lot more challenging this year. For instance, IBES consensus expects MSCI All Country World Index earnings to grow 3% in 2023. While this may not be much, we see limited downside risks. In the event our worst case scenario of a recession does occur, earnings will have scope to fall further. Yet, in absence of a recession, earnings may prove to be resilient in relation to consensus expectations. However, we would not emphasize much on upside for earnings in 2023. Comparing valuations and equities, we see the relative attraction of Asian markets, where for the expected earnings growth, valuations are not expensive. US equity valuations remain expensive, but for the valid reason of being high quality. Sector-wise, financials look relatively cheap. We upgrade the sector to neutral from underweight. Our key overweights, healthcare and industrials, look reasonably valued, and we use these positions as the barbell strategy for recession risk. The communication services sector looks marginally attractive too, but we are cautious ahead of the current earnings season. Overall, we keep our neutral stance on equities, and by region we favor Asia, UK and the US in that order. By sector, we are overweight healthcare and industrials, and we continue to favor large cap quality factors strategically. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. More episodes of our 2023 Outlook podcast series are on the way. My name is Kishore Muktinutalapati, and I'll be back next week discussing our outlook for another asset class.